We've got a great panel today. I'm just going to go through and say their names and who they're with, but I think I'd like to give them 30 seconds each to give you a little bit more information about them. So here on the far right, we have Federico Pienovi. Did I say that okay?
Perfect.
Yeah? Okay, it's from Globant. We've got Ben Chisel from Starling Bank. Joe Parkin from BlackRock.
Hey.
Is this cutting in and out? Or are we good? And then we've got Daniel Thompson from Lloyd's Banking Group. So let's start from Federico, and if you could each give 30 seconds about yourself.
Yeah, for sure. Federico Pienovi, I'm the head of Globant for EMEA. Globant is a digital transformation and cognitive transformation company. So probably I'm the only one not belonging to the financial services, but we are helping many financial services doing integrations between retail banking and asset managers and wealth managers, and as well as helping transform digitally those big players.
Cool. So I'm Ben Chisel. So I'm product director at Starling Bank. I've been at Starling for about 2 years. So gone from a time where we weren't a bank and didn't have a product in market to something where we have a lot more than that now. I'm in charge of providing customers a great experience, optimize our existing product, and launching new products for our customers.
Joe Parkin, so I'm responsible for the iShares and digital wealth business in the UK at BlackRock. I suppose really what we're looking to do is help our clients, which are institutions in the asset and wealth management space, build better investment and technology solutions to help engage with their clients.
And Daniel Thompson, Lloyd's Banking Group. So I'm a lab product owner within our group transformation function. So looking specifically at the kind of advice and guidance services that we provide to customers across their savings, investing, and long-term planning, so pensions and so on and so forth.
Great, thank you guys. Thanks for being here as well. So before we start, we're going to ask about 3 or 4 questions. And afterwards, we're going to open it up to the audience, and we have an app here. So if you log into your, the Wealth Tech app, you can submit questions as you go, and then I can accept them, and we'll post them on the board. So to start, I'd like to ask Daniel and Joe, can you tell us in what ways are wealth and asset management firms looking to partner with retail banks for new distribution channels, and tell us a little bit about what these partnerships look like.
I mean, sure. So I think a couple of things here. I think certainly in the UK there are 5 very large banks, 1 very large building society, who have millions and millions of customers, and a real good knowledge of retail customers. And the asset managers, as the shift of responsibility happens for pensions, retirement, savings, investments from the state and the corporate onto the individual, the retail banks are having to think a lot more about how they provide those sort of services to the customers. And so the natural partnership of the asset managers running the money, helping with the investments, helping with the technology, and the retail bank's expertise around the knowledge of the customer, having that customer and owning that customer and wanting to do more with that customer, is a pretty natural fit and a pretty natural partnership.
Yeah, I'd agree. And I suppose if you've read the news over the last few months, we've obviously done a joint venture with Schroders for a wealth planning business. We've got a strategic partnership with BlackRock, again, looking at how we can leverage the core capabilities that the kind of asset managers have versus our engagement and providing customers with a full sense of their needs and their service to meet those needs. We spent the last kind of 15 years really going hard on their retail banking. Actually now, with that shift from the state to the individual, we need to start looking at their more complex needs. So what are people doing from a cash ISA perspective, but actually from an investment ISA perspective, where does that lead into retirement planning? How do we start to have those conversations with customers in a digital world, or where we use people, whether they're kind of advisors or people on a guided journey, to really help a customer understand what their money means for them?
Thanks. Ben, from your perspective, can you tell us why is Starling Bank looking to partner with asset and wealth management firms?
So from a kind of starting from a business model perspective, we aren't trying to do everything ourselves. We don't see ourselves as trying to be an expert in every different aspect of financial services. We started off as offering current accounts to our retail customers and just tried to provide a great experience of day-to-day management with their money. That said, we know that our customers want to do a lot of things with their money, and we do see ourselves as having a responsibility to help our customers live a healthy financial life across their entire financial lives, not just their day-to-day banking. But because we don't want to do it ourselves, the only real kind of alternative and option for us is partnership. And so there are a lot of other companies ranging from some of the largest asset managers in the world through to some of the technology startups in London who are much better at this than us. We don't want to try from day one to be the best at everything. We want to be the best current account, but then we want to give our customers access to the best options through our marketplace. And so, we take it kind of, from my own perspective, I kind of see three things: trust, value, and selection as being very important for our marketplace. So our customers, trust us, and so we want to make sure that we do the right due diligence on our partners in our marketplace. For a marketplace to be kind of successful, we need to provide our customers with selection, which requires us to go out and do find the right partners and get them into our marketplace. And then from a value perspective, that's something where selection and a large number of partners stimulates competition between them in our marketplace, and not something we've done so much yet, but really it's about kind of doubling down on trust, increasing selection, and then hopefully providing value.
I think this is the biggest change we've seen in the last 12 months within the industry, is this acceptance that to bring other providers in, particularly in the technology space. We saw a lot of failed attempts to build it yourself. And actually, it was almost like a year ago, it was almost like a school disco with the boys on one side of the room and the girls on the other side of the room. So the fintechs and the established firms are kind of staring at each other. But now I think there's a real acceptance that working together is right. And especially within a retail bank or any of these large organizations, tech agility is one of they really struggle to kind of solve for it. And so by bringing in people from outside, doing it in a slightly different way, I think it's the way to kind of get things done.
Yeah, and I think, absolutely agree. I think our focus is on providing service to the customer and having that trust of the customer that their service will be there when they need it, and ensuring that it's available to them 24/7, 365 days a year. We also appreciate that we aren't the best at developing new software or building complex algorithms to help customers do that longer term planning, and that's where we look to the expertise of either a fintech and lots of proof of concepts going across all the big banks, but then also looking to partner with kind of larger institutions that can bring the scale that is needed. It's all very well kind of partnering with a small fintech with 50 people in a room in Shoreditch, but when you've got 8 million people logging into your mobile app every single day, you need the robustness and the trust and the trust that customers engender with us. We need that trust in our suppliers.
But just to add a little bit, because we kind of sit in the middle between the asset managers and the retail banks, and reality is, I believe it's all about speed, right? Because many of these business models haven't been proven. With the banks, the retail banks don't really know if this is going to work or not. So it's all about speed, how we partner with somebody to bring something to the market really quickly that I can really test if this business model will bring any value. And that's the whole thing about partnering, right? Because at the end of the day, probably BlackRock or Starling Bank or Barclays, what they really want to have is the ownership of the consumer, because that's what we're gonna talk a little bit about more. But how they prove something really quickly, a business model, and being able to capture data and tailor the solution to extend the relationship with the customer, I think that's where all partnerships come about.
So, Joe, this may be a fairly obvious question, and we've touched on it a little bit, but why are asset managers tapping into the retail market?
I mean, there's a fundamental shift going on here. Certainly in the UK, it's happened in the US. Some other markets in Europe are on the journey. But there's a shift in responsibility with regards to investments from the state and the corporate. You go back 10 years, DB schemes were rife. Very few people had DC schemes. Now you think about that money that's just moving across, and it's shifting onto the individuals. So individuals are making more and more decisions, and so asset managers are having to react to that. Now, some of them are deciding to go direct to the consumer. Others, such as BlackRock, have made a very clear play to say, we want to partner with people that are dealing with the end consumer. My view is really like if you don't have that deep retail understanding, it's actually very hard to create a retail business. The language you talk in, your brand, how you think about communicating things. So from our perspective, we're very good at talking to people that look and feel a bit like us on the institutional side of things, be it a fund manager, be it a COO, be it a CEO. Or an advisor, but actually when you talk to the end customer, there are people out there that have that experience, such as the retail banks, such as the wealth managers, supermarkets, football clubs, whoever it may be, they are better at talking to the consumer.
Great. Question to all. What can retail banks start doing to help their customers manage their wealth? And what part or how much of that service do you think the retail banks will actually play? Is it all partnership, or do you think they can do this themselves?
I think there are limits to how far we can go, and I think it's really about giving people context for their money and what that means to them and what that allows them to do. At the end of the day, I don't want a pension. I want to retire on a reasonable replacement income for the salary that I'm no longer doing because I've stopped working. But it's that experience and ensuring that the customers can understand what that means for them, but then they have a seamless way to execute on whatever they've chosen to do or where they need help, because pensions are boring and complex and most people don't think about them. But there's going to come a point in their life that they go, this is now really important. And if they've put it in a drawer and not opened their pension statements for 20 years, they're probably in for a nasty surprise when they kind of get to that point where they're going to need to replace their salary. So it's about engaging customers early in that, and then I suppose bringing it to part of their everyday banking experience. So to Joe's point, it's now beholden on the individual to replace that salary when they retire. So how can we help customers to the point where they understand what their options are and they're confident either to make their own decision or to seek advice where if that's the most appropriate thing for them. But we're not going to be able to provide the full spectrum, or we might be able to do it, but it's going to take us 10 years, in which time the market will have moved on. And that's where we're looking to partner and looking to form strategic relationships with the experts in that field.
So I think we don't do as much as we should be doing, both individually, governmentally, and from an education perspective with regards to our finances. As I said, the responsibility's shifted, and I think it's a responsibility that the individual's not ready for yet. And so if you think about there are three parts to someone's health and happiness. Their physical, their mental, and their financial. And over the last 10 years, we've done a huge amount in the UK around the 5 a day, around people's physical health, the gyms, every newspaper you open has a new diet fad, whatever it may be. Mental health has also been put massively on the agenda. And then financial health is starting to get put on the agenda. But we actually need to do a lot more collectively around educating people. And education is hard when you don't want to be educated. And I think the retail banks are in a perfect place to do that. So from my perspective, like, why do I have 12 apps? Why are my finances so complicated? Everyone has a spreadsheet. Everyone has a spreadsheet somewhere where they're trying to manage your stuff on. I want one place to go, somewhere that understands me. They understand my ins and outs every month. They understand my mortgage. They understand my insurance. They understand how many kids I have. They understand when I want to retire and how I want to retire. And then kind of nudges me to do various different things. But at the moment, it's in 12 apps or 12 different places. It doesn't really understand me as an individual. And it's trying to sell me a product, often an investment product or a financial product, not trying to solve an outcome or a solution or a goal such as I want to retire when I'm 56 and move up to the islands of Scotland or whatever it may be. But
It was quite helpful. You just described Starling's product strategy for me.
I actually stole it from the website.
I think one of the things actually quite refreshing hearing some of the other guys say this, but the kind of concept of owning the customer actually feels kind of a defensive thing where you're trying to protect other people from speaking to your customers. And actually that's a concept that needs to get thrown away. Actually, you need to kind of provide customers with great experiences, and you need to earn kind of their trust and, kind of provide them with utility and value so that they come and, use you as their primary interaction with their different financial products, which is what we're trying to build with Starling. I think the other aspect that Federico mentioned before that is actually kind of a key strategic advantage for us, and I think, and actually something that goes kind of under the radar, actually velocity and the ability to try things out very quickly is incredibly important. So if you've got a load of ideas but it takes you 12 months to execute them, when your competitors take half the time, that's no good. And so one of the things that we're very proud of is that we're able to launch new products in weeks rather than months and years. So I know it's kind of a product that every other bank has, but like, for example, we didn't have a joint account. We built a joint account in 3 weeks, from kind of concept to actually getting it into the hands of our customers live in our app. And so that's kind of the velocity that we need to operate at a company. And if we can kind of have the right vision, we care about our customers, and we can move at that speed, then we can deliver a lot of value. It sounds simple, but it's not.
And did you build that joint account because people were asking for it?
Absolutely. It's one of the things where, we started off and we said we're just going to build a current account. We're going to be great at offering a current account. But then, as everyone knows, then you kind of launch something and people start to ask for other things. And I think that with joint accounts in particular, we tried to kind of take a step back and say, actually, the user requirement is actually just to manage my money with one other person. So could we kind of reinvent that experience and kind of build a virtual account that essentially has all the same functionality? With a joint account, actually, people just said, okay, that all sounds nice, but actually just give me a joint account. So we kind of built that. We just tried to do it in a way that just had a few kind of additional better experiences. So for example, if my wife uses her card, it pops up in my app and says, Yasmin's spent £25 at Tesco's. And somewhat controversially, you can see the tally of who spent what from the joint account over a month. So we're not responsible for resolving any disputes there between both account holders.
So what honestly we have seen in the marketplace with every industry is that companies are trying to extend the relationship with the consumer, extend the journey with the consumer, which involves sometimes starting adding things that were not naturally within their industries. We have seen this going on with digital native players like Facebook having a banking license and so on. And I think we are in a process of where industries are going to start merging. So it's in this particular case, and for this question, like when you are introducing retail banking clients to wealth and asset management, what you need to do is, given that you understand your consumer and you have the technology platforms that allow you to understand how you easy transition to start doing it. So, for example, instead of asking them to invest £10,000, you ask them to do micro investments, right? To understand a little bit how the model works and how the interaction, the user experience, and then start adding that to their business life, the business styles, and the life goals, objectives. Like, I want to buy this house in 10 years. I want to retire in 20. So what is my plan? And how you see these consumers that don't really understand much about investment, how you provide them with information that they feel comfortable, that instead of just adding a micro investment of £500, how they do 2,000, because they already know that they feel confident that they have the information that they need in order to keep advancing in their investments.
Okay, Ben, something you said I found very interesting. You said we've got to throw out the idea of someone owning the client. But that kind of sounds like, it doesn't matter who owns the client as long as we own the client. Because there's long-term profitability, and also you have to align investment advice, that there almost always has to be, I would assume there has to be an owner of the client. And I would also assume that firms want ownership of that client. And I'd like you to talk a little bit more about that, and then maybe we could have someone else jump in as well.
I think what I really meant was kind of the spirit behind the term owning the customer. I think, to Joe's analogy before of two people, the guys and girls on each side of the dance floor in a disco, I feel like owning the customer actually means we're going to offer someone 100 quid to switch over their primary current account, and then we're going to sell them our mortgage, our loan, our credit card. That's kind of what owning the customer has meant, and it's this kind of, protected environment. Open banking is something that's trying to kind of break down those walls, but actually, from our perspective, we don't need someone else to tell us we need to change the attitude. Like, ultimately, we do want to be the single place that customers go to manage their money, but we're not going to do it in a way where, we're going to kind of, build up the walls and kind of keep our customers in and try to not allow them to leave. We want to do it in the spirit of providing customers with value, just trying to provide them with the best experience from our app to manage all of their money, connect with partners, and just build up that kind of relationship with customers, and over time just hope that they don't leave. And actually we see great retention metrics, which says that we're certainly on the right track, but obviously we kind of have a long way to go. I think one small anecdote, I think just touch on one of Federico's points as well. I think it's very important that we start thinking about actually what the customer's objective is with their money, particularly when they're looking for long-term savings. So, we have a feature in our app called Goals, which someone just gives a name and a photo to a container of money, essentially a kind of virtual container of money within their current account. But we can actually see what people are saving up for. We know that, knew that I was going to be speaking today, so I had a look and can see that, we've got kind of 1,500 customers who are saving up for Christmas 2018. It's very clear they're doing that. We can see they're 15% of the way there. So it's the kind of thing where we can actually, build up the relationship with them, see what they're using their money for in the long term, and actually try to start encouraging them to achieve that with their with our customer experience. But on the flip side, we see people saving for holiday 2019. We see people saving for house 2022 and stuff. So we can we actually have the data about what people are trying to save up for, and our objective is to try to help them do that. Obviously, a kind of long-term investment solution when you're saving for Christmas 2018 is not particularly valuable, but actually if we see people trying to save for a house deposit in 3 years' time, then actually maybe there is something we can kind of point them towards there.
Thanks. Federico, you've got you have an interesting example about owning the client.
And so we have been working with a very big retail bank in Europe, partnering with BlackRock, right? Because they wanted to offer micro investment and investment advice in the retail platform. So it's a little bit of what we have been discussing, right? Who is what is the company that is owning the consumer? It's this retail bank. Obviously, we have a disclaimer when they're building their portfolio and they're looking at the performance and looking at the risk profile of the person. You have a disclaimer saying BlackRock is providing all the expertise because they're the number one asset manager in the world, and so on and so forth. But at the end of the day, that's a disclaimer. We believe that the owner of that relationship is this big retail bank. And if tomorrow they decide to swipe and say it's no longer BlackRock providing you this service, it's somebody else, it's easier for the consumer to transition because it's transparent. The relationship was already built with the retail bank, and maybe is fading out the other partner that was invisible to the consumer.
Yeah, no, I mean, I agree with what Ben said in terms of it's not about owning the customer, it's about providing the customer with services that they need and gives them value in terms of understanding and managing their finances. Customers, so kind of current account switching, open banking is obviously yet to take off in a big way, but it's about those companies, whether they be banks, whether they be the kind of compare the market or whoever, in terms of providing a place where customers can manage, understand, and kind of achieve the things that they want to do with their money. It is merely a facilitator of customers doing what they want to do, whether it's Christmas or the holiday. It's about how you deliver those services in a seamless way that gives people the context and makes it easy for them to do things which most people and probably people outside of this room really don't think about their finances as much as we think about their finances. We spend a lot more time thinking about, well, what are customers going to think, or how do we convey the interest rate, or how do we show projected investment returns? And probably the answer is don't. Say, get customers to understand what investing means, that it's, you are putting your money at risk, and then ensure that they have an easy way to make that, and then track that. And if it gets too hot, they either understand why the markets have fallen, or they're comfortable with their decisions, or actually they can get their money out because they've had enough. Investing is not for them.
Great.
I think the word seamless is a really interesting word that's definitely emerging, becoming more and more prevalent. I think that, you think about how we've tried to sort of engage people, prompt them into their financial services, or doing more with their financial services previously. We try to educate them. Education is actually really hard when you have a disengaged audience. So, like someone who doesn't really think or care about their retirement or anything beyond kind of where they're going to go on holiday next year. The other way we've done it is we've scared people a little bit. So you say to them, right, you're never going to be able to retire if you carry on spending this much, not saving. And this seamless thing I think is really interesting. So things such as Moneybox, so Roundup technology. You see people like suddenly realizing they've got £1,000 invested for the first time, or they've had their debt paid off. And so I think actually having things that are done seamlessly within financial services, we should think about more and more. It doesn't always need to be, an advisor and a full-blown advice journey, a full-blown fact find, 25 minutes answering a load of questions. Sometimes it can just be those small little things that you do, kind of like hygiene factors in and around your finances, that banks and anyone else can really do in a seamless fashion.
Fantastic. So let's see. We've got, I believe, about 15 more minutes. Is that right? I want to open it up for questions, but I'm not sure how much time we have. Yeah? Oh, right here. Oh, we have less than 15. Thanks. Okay, let's open it up for questions. I'm not sure we need to use the tech. Do we have any questions in the audience? Don't be shy. I'm going to ask more questions if you don't have any. Okay, right here.
Interested to get the views of the panel in terms of advice and the integration between digital advice platforms and face-to-face or over-the-phone advice, and the importance from the panel's perspective of consistency of that advice and consistency of the technology.
So consistency between the pure automation and advice.
So as we move towards digital advice platforms, giving regulated advice digitally, and the ability to have that advice consistent, whether it's face-to-face, over the phone, or digital.
Great.
I can take it. I absolutely agree. I think digital is a means to providing a service to customers in a more accessible way. So with the advent of RDR and so on and so forth, and obviously the banks pulling out of kind of face-to-face advice in branch, we've seen the launch of the robo-advisors more recently, and then I suppose even more recently, Santander and NatWest with actually digital advice journeys. I think as an organisation, you need to have one set of kind of advice guidelines, and that needs to be applied, whether it's a fully digital-only journey, whether it's a kind of a hybrid digital-human, or whether it's a full face-to-face, whether that's remote or actually sitting down in an office. But your advice framework needs to be the same. So your attitude to risk, your risk categories to portfolio mapping needs to be the same across all of those. To ensure that you do have consistent outcomes for the customer at the end of the day, regardless of the channel of choice, and obviously the regulator would be kind of keen on that, is regardless of the channel of choice, the customer is going to get that same outcome from an advice perspective, regardless of how they've interacted with that service.
I think certainly in the UK, this is a fascinating topic around advice, and I think a few things are relevant. So. Like every single time that someone touches a financial services product, they don't need an advisor and they don't need full-blown advice is the first thing. Like sometimes it's just a little bit of education or it's a little bit of a nudge. So for example, the first time someone puts some money into a cash ISA, does that need a face-to-face conversation? Does that need a full-blown fact find? Question mark. The second thing I think is there are some things currently and may still always be very, very difficult to digitalize. So at retirement. So at the moment, like I know a couple of people who I've come across who are trying to digitalize that retirement advice. You need a huge amount of information on the person, on the customer. Very few people have that information, and very few people could probably design an algorithm in order to deliver that. So I think some things are always going to be done face to face. I think what we're starting to really get the understanding of is what can be digital and what needs to be face to face, what needs to be hybrid, and what needs to be just someone answering some questions versus actually I need to speak to, an advisor and, speak to the robo, speak to the digital players. Like 98% of the time, someone's calling up and they've got a question, have I done this correctly? Or how does this work? Or whatever it is. These are not, so having an advisor sitting there answering those questions is not necessarily the way to go. But I think we're starting to get on top of it. I think that the industry is starting to get more comfortable, the regulators are starting to get more comfortable. And it's really the only way we're going to solve for, delivering financial inclusion to millions of more people in the UK is to get this sort of hybrid model, digital and face-to-face or on the phone if you need it, right?
And I think as an industry, we've historically looked at digital as a cost play, as in it's cheaper to provide digital services, they're scalable, you build it once and you can deliver it many times, particularly when you come to kind of at retirement advice and kind of more complex customer needs, whether it's retirement or whether it's inheritance tax or so on and so forth, that actually the human has additional value to the customer and therefore it's actually a value-added service. I don't really want to go through a fully digital journey, even if it can be built, and go, I'm about to press a button that's going to determine what my retirement's going to look like for 30 years. Mm-hmm. I want to speak to someone because we're human beings. We like that human interaction, even if it's just that reassurance of, yeah, I can see everything that you've done and this is the right outcome for you based on what you've told me. But there are going to be, no matter how good the tech gets, certainly in the next 10 or 15 years, you're not going to be able to pick up on some of those subtle cues or just really deep understanding of a customer situation that actually that conversation, and it might be a 5-minute conversation about the weather, but unearths some deep-seated kind of need to go, no, I really value the security that an annuity might provide me as opposed to a drawdown. And I'll adapt my lifestyle to that reduced income because that will help me sleep at night. At the end of the day, it's about ensuring customers can go about and do the things that they want to do and do that with a kind of a mental well-being, that they can sleep, they're not worried, they're not thinking about, am I going to have enough, am I going to run out of money, what does the next market downturn going to mean to me?
But at the same time, we wouldn't have this conversation if digital was not a key piece of the future, right? Because as we're trying to integrate retail customers to wealth and asset managers, it would be impossible to do to bring 3 million consumers to do tailored advisory, right? So technology is enabling us to reach to more consumers. Automation of that is definitely helping to start the education process, definitely for more tailored solutions that are really defining moments in your life, like retirement. For now, I believe there's the human component that is needed. I believe that probably in 10 years, we're going to have different conversation as AI keeps evolving. But at the end of the day, it's how much data and how much touch points you are having with your consumer in order to capture the data that you really need to start tailoring more and more and personalizing more the portfolios that you can build for them and the investments that you can build for them based on what you really know about their life objectives.
Federico, could you talk a little bit more about his question? How do you align the tech and the personal advice? We had the risk profiles and making sure, I think it was mostly risk profiles are aligned.
The full kind of, I suppose, guidance policy or advice policy in terms of ensuring that you have built the tech Yes, you can't ensure that the conversation that the advisor is going to have is going to be exactly the same in a digital journey because it is systemic. But actually, your framework for providing that advice is consistent.
And go ahead.
No, I was just going to say the other thing it does is it should give the advisor a lot of confidence that technology sits underneath it. Very few people who have been fined in the past for the advice they've given actually gave bad advice. They just didn't have the records that sat behind it. So I think also from a compliance and risk management perspective, technology provides a really useful tool for the advisors to make sure that and post as well when they run the post like post advice sort of reviews. I think that's very useful as well.
That makes sense. And from a tech perspective?
So I believe that it's obviously start knowing better the customer that we all said, and start extending that relationship with the consumer for them to feel comfortable with giving you information that as a retail bank you currently don't hold. Like maybe the Facebooks and the Googles, the Amazon of the world know much better about your finances than actually a retail banking does. So how you start offering those services that we touch upon here, that it's not only the customer because you build walls, it's because you are offering services that really help them on their day-to-day journey. And they're more willing to open up, give you more information, and you can tailor-made through technology something that today is only possible through a conversation.
Okay. So last question, and I think I'd like to ask Ben and Joe, but also if anyone has something to say about it, feel free to speak up. So from a social perspective, and we've touched on this a little bit, there's a lot to do in educating the masses and how to provide products that don't just go to top-end investors. What's being done to access this market besides just robo?
I mean, I have two thoughts. I think, but I don't know if either actually answer your specific question, but I'll just say them anyway. So,
or if it's going to be pure robo, that's fine. Just your thoughts.
I think one thing is, again, it's good to hear that this is actually present on the panel as well, which is actually everything needs to start with an actual desire to help everyone. I think that as much as kind of there are a lot of considerations with giving people advice, actually taking it kind of one level up, people do need help with certain aspects of their money, and I think that it starts with people having a desire to actually help people, and that's help everyone with any of the questions they have with their money and provide them answers in the right way. I think the other thing that kind of was crossing my mind hearing the guys talk was actually the approach to providing the right information and help to customers. I think that if we think that we're just going to, one day provide a fully digital kind of robo advisor that can answer every question that a human might be able to do, with all of the nuances that people kind of have, and the experiences that people have built up over a career, that's not going to happen. That's just not how machine learning platforms actually get developed. I think these things start off with very specific use cases with very objective data. You build things, you experiment, you kind of get something to market that works, and then you start kind of iterating out from there. So, I think that there's a responsibility to help everyone, but I think the key thing for me is, it's about the technology, the ability to iterate quickly, and the desire. That's kind of mumblings off the top of my head. I don't think it actually answers your specific question, but
yeah, just how to access the masses that can't afford a BlackRock investment advisor.
I mean, BlackRock don't have an investment advisor. So, look, technology is the enabler for financial inclusion. The technology is now good enough to help deliver what used to be for the very rich and wealthy, delivered face-to-face, can be delivered up to a point using technology to everyone. I think our job is actually to change the conversation and the dialogue a little bit. And we spoke about this financial health craze, or people getting as passionate about their financial services or their finances as they do about their physical health. And I think that it requires a change in mindset within our industry. We're way too focused on the product. The product is simply the engine, but no one buys a car on the basis of an engine. They buy the car. Very few people in this country have even seen the engine of their car, let alone how it works. And I think as an industry, certainly the wealth management industry, the asset management industry, tend to focus too much on the engine. And so I think our job is to move it away, to try and educate people if they want to be educated, to make it seamless for people, to make it automatic, which technology can do, and then to kind of these little hygiene factors. Like, not everyone has become, a sports medicine sort of major. Like, it's just these little things you do every day, like whether it's the 5 a day or the 9 a day now, whether it's getting your heart moving 3 times a week, whatever it may be, drinking lots of water. These are all small little things that help someone with their physical health. And we need to do the same sort of thing in financial services, in my eyes.
Fantastic. Well, thank you so much. Round of applause for the panelists.